Hey everyone, Bob Kendall here. Just want to introduce you to our entire suite of products. We're giving a 33% discount. Basically it was $297 for the entire suite. Now it's $197 per month and you pay by a quarterly basis. And this is access to everything we do. Our professional software, which gives you the ability to do multivariate trading, will also give you the WaveTech platform, market grid numbers every day, as well as our stock screens that were developed by our institutional certified financial analysts. Everything we do is included in this package. So sign up by the end of the month and get this special of 33% off. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, it'll be typical after the live stream. It'll be a review of some of the things that I said earlier today in the live stream, so I strongly suggest you go back and watch that. There was a lot of great content delivered in the live stream, a lot of detail and explanations of a lot of things that I do and outlooks on all the markets. Make sure you go and watch that. That will be your best resource, and we've marked the timeline so you can see exactly what I talked about. It was a 2.5 hour live stream, so enjoy that. As we get into tonight's video, we have a couple things to look forward to. On Thursday, we have the claims numbers coming out. They're expected to show 393,000. Now, these numbers came in worse than expected last week, and I expect they're going to do the same this week. My outlook suggests that the employment situation is going to get worse, not better, as we go forward. I know a lot of folks are expecting some kind of reopening trade to happen in the third and fourth quarter. I think it's going to be pretty much the opposite, where we're going to see a lot of challenges as we come in to third quarter. We've got another week left in this month, and we'll get into third quarter. It won't be until mid third quarter or later when we start to see some of these challenges come in play. But I do believe we're going to see a lot of things start to show up incrementally as we go forward. The economy, I think, will struggle in some areas, and we're definitely going to see inflation continue. I went through a lot of details in my expectations for inflation and interest rates. So as I said, make sure you watch that live stream. There was a lot of good material there. Back to the claims, the expectation and market consensus is for 393. I think they're going to come in 425, 450. And then the continuing claims, I think, are going to uptick again. They were at 3.5 million last week. We're probably going to see them at 3.7 or maybe even better. For the most part, over the last 3 months, we've been between 3.4 million and about 3.7. I think if we get outside of the bounds on either side of that, that's going to indicate the next trend that's likely to evolve as we go forward. My expectation is that we'll take out the top end and we'll start to see employment numbers start to climb again, not decrease as many are expecting. A lot of my expectations are that folks are looking for new jobs. They're not going back to their old jobs. There's just a lot of issues of getting employment back online from this point. Everything's been pretty easy, just like I told you in last November. We came into the beginning of 2021. Is that the easy money was made last year. Now it's much harder. You really have to be a good stock picker. You really have to look at the places to make bets in this market versus what it was like last year, which was a dartboard market. There were a lot of things you could just throw at and make a lot of money. That's not the case in today's market. The final thing that I'll talk about before just giving you an update on the overnight action and what I expect for Thursday's action on the markets is our database. We saw absolutely flat. There were 276 buys, 270 sells. I'm not even going to go through the database tonight because there's nothing really to cover there. The database is at 31.87% bullish. I'm just going to skip over that. I'll go right into the technicals on the typical markets that I cover every night. That we also have GDP numbers coming out today. It's the third revision, so it's not really materials. It's expected to come in at 6.4%. And the big number I'm watching today will be that deflator number. That's expected to show a 4.3% number increase. So that's an inflationary number. And then on Friday, we're going to get PCE. I'm expecting both of these numbers potentially to come in a little hotter than expected. So that is probably going to set the tone over anything else that's going to come out today. Let's go ahead and take a quick review of the charts, see how they're set up and what my expectations are for Thursday. As we begin with the S&P futures, they are up 10 handles overnight, up 0.25%. There continues to be a solid bid in this market ahead of the claims numbers and GDP, things that I discussed in the opening comments, but we're still not seeing any type of acceleration or any acknowledgement by the PPMs that we're starting to see a new trend involved. In fact, we're seeing them decline or remain flat on PPM 1 and 3 are declining, and the WaveTech 200 is declining. We're just basically seeing a absolutely flat market. Now, the market has stalled up at these levels, and we're continuing to grind right at this higher end between 42.40 and 42.50 high. We've seen this pattern. If you look at this chart across the screen, zoomed out, you'll see literally since around April, we started in this sideways range. We had a little dip of 4%, and then we came right back into the range again. We've been bouncing around this 40, just above this 4,200 level for multiple days. We dipped down between last week and on Monday down to just about the 41 handle, and now we're seeing the market just stabilize again. There's literally no momentum in this market. As we look at the market grid for today, so far we've seen a high-low of 42.31, 42.42. We're right at the R1 number, 42.43. My expectations is that we'll see a possibility of a S1 low, 42.19, and ultimately probably trading down toward 42.06. There are some important numbers right at the 42.19 level. The 10 period moving average 42.22, but the PPM is basically flat at 0.03. So there is a 90% probability that it will go through that number. So we're likely to see this R1 S2. As always, if we penetrate through R1, then we would see a move back toward to test the all-time highs. 42.56 would be the extreme. As I review the SPX closed down 460 yesterday, just slightly lower. The PPM, same type of configuration. I'm expecting to see these even turn down a little bit more or remain flat. And this actually suggests there's some vulnerability for the market to trade back into the 21 period moving average 42.19 and the potential of trading as low as 41.93 in this pattern. As we look at the market grid for today, we are seeing the market grid narrow again, and R1 is 42.50. That would be about where we should open in the morning if the futures remain at the levels they are right now. So R1 S2 be 42.50, 42.24. We're really seeing a very quiet market. With the news that's coming out today, the claims numbers may be enough to actually get some volatility in here. The extreme would be S2, R2, get some kick up in volatility. Next market I'll cover is NASDAQ. NASDAQ continues just to climb higher. We're up 37 handles right now, 0.26. Which is similar to what the S&P is up on a percentage basis. We just continue to climb above this 10 period moving average. The 10 period moving average now is at the 14.124 level. So far the low has been 14.270 overnight. We look at the market grid, 14.225 is S1, R1 14.301. So we've traded basically an R1 and have not reached the S1 number. We're likely to see an R1 S2 level for today in the NASDAQ. Same scenario, but a similar formation as far as the PPMs go. They're not really accelerating here, but we are at trend level on PPM 1. PPM 2 is just below trend level, so this suggests there's a 60% probability to remain above 14,124 on an intraday basis. So I don't see us penetrating that 10-day moving average. The final market that I'll cover tonight is gold. Gold is trading once again at that 1776 level. As we look at the pattern here, we've been absolutely flat in gold. It continues to maintain this downward trend. The ppm1, I was expecting to see it start to bleed off some of this downward pressure, but it's actually downticked just a little bit to minus 0.65. ppm2 is at minus 0.32, so these are strong downtrends. And if we don't get back above the 1800 level here in the next couple sessions, then we're likely to see a retest of the 1776 level and the possibility of moving lower in the pattern. I did do a deep dive on gold in yesterday's live stream, so make sure you watch that. This will complete the video for tonight. Thank you for watching. Thank you for coming to the live stream yesterday, and I will talk to you tomorrow night. Hey everyone, thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.